in listen-only mode.
Good morning, everyone. Welcome to Phillip Securities Research Weekly Market Outlook. Today, I'm Ewan. Today, I'll take you through the market outlook, followed by Nicholas, who will take you through our featured company for today, which is Istra. In terms of the market outlook, last week we saw a wide range of release of PMIs, mainly from US, China, Eurozone. So what essentially the main key takeaway from last week was that we're increasingly seeing more signs of softness in the global economy, specifically in the US and China. Manufacturing continues to expand, right? But the pace of expansion has sort of eased. In the Eurozone, in terms of composite PMI, which is your manufacturing and services activity, both of them remains in contractionary zone. And even Germany, the most resilient economy in the Eurozone, has been dragged down by its Eurozone members and is now in contractionary territory. Moving on to the US, we are also seeing that core capex orders, which are your non-defense ex-aircraft, the pace of increase has sort of eased also, but nonetheless it has continued to inch up on a month-on-month basis. So although we are seeing more signs of softness in the global economy, we think that markets could be still supported by liquidity from your major central banks, right? So for instance, in your ECB, come 2nd May, the ECB will have a monetary policy meeting. We're actually penciling a possible rate cut of around 25 basis points. For the Fed, we also meet this week, but we think that the debate of an early large-scale asset purchase withdrawal have sort of reduced. For the Bank of Japan, the question is whether the Bank of Japan actually ran out of ammo after after early April's shock and awe campaign when it undertook aggressive monetary easing. So what we saw from last Friday's meeting was that there were no new major announcements. But nonetheless, we could expect continued liquidity from your major central banks. In terms of major risk events this week, it will be a blockbuster week. Come 1st May, which is Labor Day, in the morning we would have the China's PMI released by your National Bureau of Statistics, and then the HSBC version, which is focusing more on small medium enterprises, being released on the 2nd of May. Come 2nd of May, in the wee hours of Singapore time, we have the FOMC meeting, and then subsequently in the evening we would have the ECB monetary policy meeting, where we are expecting a 25 basis points rate cut. Come 3rd May, Friday, we would have the non-farm payrolls data coming in, and that could be a major risk event. And over the weekend on 5th May, Sunday, we would have the Malaysia 13th general election. And should the Barisan Nasional fail to garner a simple majority, or even fail to get a strong mandate of 2/3 of the electorate, there could be a knee-jerk reaction once markets reopen on 6th of May, similar to what we saw in the past general election, the 12th general election, back then in 2008. So for the US, the S&P 500 is struggling to make higher highs, right? And the bearish head and shoulder pattern still remains intact. We think the S&P would face strong resistance at 1590 and 1006 psychological resistance. For the Nikkei, the Japan market is closed today, but since last week, the USD-JPY, for the USD-JPY, the 100 level has been elusive. Thus far, we are still a whisker away from the 100 level, but we are cautiously optimistic about Japan, or rather specifically the Nikkei, on signs of structural micro-reforms by the Abe administration in attempts to remove protectionism in certain industries for certain pilot areas. For the HSCI, it's confronted with strong resistance at your 11,000 level, right? Key support will be at your 10.5K level, which is also your 200-day moving average. For the HSI, it is showing some signs of turning bullish. It broke above the 50-day moving average, as long as it breaks above the key resistance of 22.5K level. The major risk event for the HSI would be China's PMI release on Wednesday. Key support will be again your 200-day moving average, which is around your 21.5K level. For the STI, consistent with what we have guided previously, the STI broke out of the tight consolidation range and is on track to challenge the 3,400 level, followed by 3,485 peak. Key support is being pegged at the 3,320 level. For the Thai index, it resumed its climb last week after a pullback, right? For the Jakarta Composite Index, the lower lows on momentum have resulted in prices consolidating and failing to make higher highs. For the KLCI, it remains in consolidation mode. Markets at this juncture have priced in a simple majority win by the Barisan Nasional. Should the Barisan Nasional gets a strong mandate, which means receiving a mandate from more than 2/3 of the electorate, we would look to overweight Malaysia or KLCI. But as we have cautioned earlier, should the Barisan Nasional fail to garner even a simple majority, we could expect a knee-jerk reaction when markets reopen on 6 May, which is Monday. With that, I'll pass on to Nicholas, who will take you through Astra Holdings.
Hi, good morning. I'm Nicholas. Today we'll be talking about ISRA. ISRA is a leading global offshore contractor and provider of integrated offshore solutions in the O&G industry. Founded in 1992 by Mr. Lee Kian-soo and listed on the SGX in 2003. ISRA's revenue has grown from $268 million to $984 million within a span of 4 years from 2008 to 2012, following a strategy of fleet growth, services expansion, and opportunistic M&A. At present, ISRA has 3 key operating divisions. 1. Offshore Support Services, which provides OSV for exploration, construction, production, and decommissioning stages. 2. Marine Services, which is essentially triads, which provides marine engineering and construction in 3 yachts, 2 in Vietnam, acquired in 2005, and the 3rd in Houston, USA, acquired in 2010. Subsea Services provides, and the 3rd, Subsea Services, which provides surf installation, subsea inspection, maintenance and repair, etc. This division has grown rapidly over the past 2 years thanks to the $250 million acquisition of AMC from Norway in 2011. Indeed, it is the largest revenue contributor, accounting for close to 56% of ISRA's total revenue in FY12. So what's the outlook of subsea market given the large exposure of ISRA? According to forecasts of Douglas Westwood, investments in subsea hardware between 2013 and 2017 will double to $124 billion compared to the preceding 5-year period, with the Golden Triangle region comprising Brazil, West Africa, and Gulf of Mexico accounting for 44% of total subsea capex. Subsea projects are increasingly in harsh water environments such as North Sea, Arctic Sea, as well as the as well as in the ultra-deep water segment. The average size of the subsea contract has also been increasing at an average rate of 8% per annum, from about $150 million in 2006 to $240 million in 2012. Furthermore, the subsea market has also been consolidating over the past 3 years. We see GE acquiring Wellstream, Subsea 7, and Acer G merged, ISRA acquiring AMC, and we expect this trend to continue as projects get more complex and bigger in size, which in turn will result in better pricing and margins. While we expect to see strong demand for subsea installation and construction over the next few years, driven by the booming ultra-deep water activity in the Golden Triangle region, outlook may still be muted in the near term. In fact, the recent outlook comments by Subsea 7, one of the top 3 players within the subsea market, they expect the outlook in 2013 to be tempered by delays in project awards in 2012, as well as supply chain bottlenecks impacting the sector. So what's the outlook for ISRA? With the deep water exploration sector looking bullish, ISRA should be able to benefit from gradual recovery of the global subsea construction demand in the long term. However, do note that the subsea outlook remains muted in the near term, and ISRA is still incurring heavy expenses in the midst of ramping up its subsea operations. Hence, we think that the market may still focus on execution and profitability in the very near term. Balance sheet concerns is also one of the major queries among investors as well. While ISRA's net debt and gearing has been increasing over the past few years, the company has been taking steps to address this concern. Besides the private share placement in March 2012, which raised net proceeds of $95 million, ISRA further strengthened its balance sheet with the issuance of $150 million perpetual securities at 8.75% in September last year. Indeed, cash and cash equivalents have increased to 90. Indeed, net gearing has decreased to 93% in February 2013 from 110% in August 2012 due to the recent fundraising exercise. If you look at the P and PB, ISRA is currently trading at 11 times PE and 0.7 times PB. This also means that it is still trading at 18% premium to the historical long-term average PE of 9.3. So that's it for our presentation for this week. Any questions? Hi, regarding the first question. Okay, please. Hi. Can you guys hear me? I hope you guys can hear me right now. And regarding the second question on Israel's ROE, ROE for FY12 has been at a low of 3% as compared to 12% in 2009. So ROE has been decreasing over the past few years. How does the shareholders list looks like after the placement? Well, okay, this one I'll have to give us some time. We will have to get back to you shortly. We'll get back to you shortly. Is Isra a good buy, sell, or hold? Regarding this, because we haven't really come up with an initiation report in this company yet, so we are not so we can't really give you a rating right now at the moment. With regards to larger players like rig builders like Submarine and Keppel Corp, because they are these companies are in the rig building segment, which their business are rather different from what Isra is. What I can tell you about Keppel and Submarine now is that the industry outlook for this rig building segment is still positive, especially for ultra deep water segment. For Golden Triangle region, Golden Triangle actually, what we mean by Golden Triangle is actually Brazil, West Africa, and Gulf of Mexico. So this three location actually forms a Golden Triangle. That's what we usually call within the oil and gas industry. And how does it actually affect Israel? Well, as you can see, because with more deep water exploration and construction, there will be more demand coming in, especially in the later stage of the oil production, and that's when subsea services actually comes into play, and that's why this will actually benefit Israel in the coming future, but not so much in the near term as in 2013. Well, we don't have a target price for Israel yet because we have yet to come up with an initiation report. What we can actually provide you is a general outlook on the major exposure that Israel has at the moment, which is the subsea market.
Hi, this is Wei here. I'll take one question from Thomas, which is how do we actually see a debt ceiling issue affecting markets this time? So a couple of taking one step back, a couple of issues regarding the debt ceiling. So essentially, the U.S. government has to raise its debt ceiling by. Essentially the U.S. government has to raise the debt ceiling by May 18, right? Which is less than half a month away, which is around half a month away. But the thing is that if we look at the balance sheets of the U.S. government at this juncture, what we're seeing is that U.S. government is actually having is raising better than expected revenue, and we are actually seeing sharper than expected budget cuts from the sequestration. What that means is that they might not breach the debt ceiling until, say, come October this year instead of May. So there could be some lingering uncertainty not in May but in October, right? So, but should they breach it by May 19, or rather May 18, then once again we could see market uncertainty as to whether will political gridlock, I mean, you might see market uncertainty owing to political gridlock over the debt ceiling come May, should they breach it by then. But our base case scenario is that this debt ceiling could resurface instead in October rather than May per se.
Hi, regards to one question regarding ROE at 3%, cannot justify a 8.75% bond. Please bear in mind that this is actually not a bond issuance but a perpetual securities. So the requirement for bonds and perpetual security is slightly different. And also do bear in mind that even though it's the FY12 ROE is at 3%, past performance doesn't equate to future results, and given the fact that now they are actually have high exposure in the subsea market, if your clients are going in at this moment, it will definitely be a bet on the subsea market in the future, in the near future, in the longer run, in a sense. What the strength of ISRA? Well, strength of ISRA will definitely be it provides an integrated offshore solution for its clients, both in ISRA and for their existing customers from ISRA, as well as the new customer base that they actually acquire through the acquisition of AMC. So definitely, after the acquisition, there will be more synergy coming along because of the fact that we actually listed three different divisions that ISRA has. The OSV chartering business will definitely support clients from AMC, providing a synergy through there. Well, weakness will definitely comes into one of the main weakness will be the strength of the balance sheet, given that now gearing is too high. What else? ISRA, you mentioned ISRA has heavy expenditure. Well, I'm not very sure which part of my presentation have I actually talked about heavy expenditure, but what I'm trying to say is that for the subsea market in the near future, I mean in the next few years, there will be heavy expenditure for the subsea market, and this will actually benefit companies that are exposure in the subsea market, and one of them is ISRA. Right, we have been speaking very loudly over here in our presentation room, so hope you can bear with us. Right, regards to the perpetual securities, there's some difference between perpetual securities and bonds in itself, and for this perpetual securities, it is actually not convertible. Questions? With regards to SWIBOR, we are not covering it, so no comment to that. Well, as in terms of subsea market per se, there are a lot of big players, so to speak, for for Swiber. So there are a lot of competitors, but we think that after the acquisition, AMC acquisition, this will definitely bring ISRA to one of the top 20 players within the subsea market. Top 3 players, namely Subsea 7, Sam Saipan, as well as one more company, which is Technic. Well, with current oil production, well, there's a study that is done by one of the there's one study done by Douglas Oilswood that they actually mentioned that so long as oil prices is hovering above $80 per barrel, exploration to the deepwater segment is still feasible. So currently, right now, this is still not a concern for us right now. Any more questions? If not, thank you very much. See you next week.